My next guest says dividend-paying stocks are the place to be right now, and he sees high-yielding opportunities in copper, beverages, even some finance companies. My guest is Cliff Remily, portfolio manager at Thornburg Investment Management. Got about $57 billion under management. Cliff Remily, explain the thesis right now, dividend-paying stocks. Is this because we take a look at the 10-year U.S. note, the Treasury note, under 3%, so stocks are a better bet?
Yeah, it's great to be here at Pimm, but certainly when the Treasury is below 3%, it creates some great opportunities for dividend-paying stocks. Things like Coca-Cola that are yielding 3.5%, things like Southern Copper that are yielding 6%. It's just one of those things that this environment, if you have a good operating business and you're able to focus just on the dividends and take a longer-term view, it just creates a great investment opportunity if you're taking that long-term view, which we do.
Tell me about Coca-Cola right now. The majority of the company's business coming outside the United States. I mean, is that one of the reasons to own the stock as well?
Well, there's certainly risk right now with the strong U.S. dollar. That's one of the reasons it's weighing on the stock. But we're taking a longer-term view at this with the Investment Income Builder Fund, which I manage. We're looking at stocks that can, create value over time. And Coca-Cola is one of those ones that's been through multiple recessions, and year in and year out, they've created on average value of about 10% per year, which they return to shareholders through dividends and repurchases. And so it's just one of those companies that just acts as a ballast. The current factor with the strong dollar is that you do have a weak euro, so that's affecting near-term earnings, which is in the stock price. And so that's something to be aware of, but when it's already in the stock price, you can actually get a great opportunity to buy it currently.
So, Cliff, would you be waiting until the second quarter results for Coca-Cola are in before either adding or initiating a position?
No, absolutely not. This is a great price for the stock. It's trading at about 15 times earnings, or actually just below 15 times forward earnings. The euro was weakening, long before analysts started reducing their estimates. So it's kind of a leg. So their estimates have been coming down. So investors already put this in the stock price months ago, and so it's something that at the entry point today, I believe, is a great price, especially when you get that dividend yield. The dividend per share will increase, and really, I think these currency problems are not completely in there. I mean, Australia's got a stronger currency, Canada's is strengthening, Brasilia is strengthening. Even in China, they have an improving currency. And so it's not just a euro factor. So I think people are missing some of that longer-term view.
Cliff, tell me about another company that's in the Investment Income Builder Fund. This is Solar Capital, right? SLRC is the ticker symbol. You're investing in a finance company, basically looking at the mid-market. Why is that?
Absolutely. Solar Capital is a business development company. These invest using debt instruments, using mezzanine loans, and providing secured and unsecured loans to these mid-market private companies. And they can charge rates of about 13%, 14% interest rates on it, plus they get equity warrants on top of that. And what's very interesting about this is that they invest in companies that can be very secure. These are businesses that have $40 to $100 million in EBITDA. And so these are businesses that are large but not large enough to be public. And to get an interest rate of 13, 14% sometimes, it gets very attractive for like a Solar Capital to come in there and provide that financing. And frankly, Solar Capital is a very well-run business, trading at less than 0.9 times book value. And so that's why you have a 12% dividend yield on this. It's just one of those great businesses that fits in our portfolio very well.
Now, Cliff, when you talk about book value, it's just adding up the value of the assets for Solar Capital and then comparing that to the current stock valuation. This is a business development corporation, right? I mean, they have to pass along a lot of these dividends.
Yes, they do. They have to pay about 90% of their income through dividends. And so that the way they grow typically is through increasing leverage or increasing equity issuance. So we bought on the IPO when it was about $18.50 per share. And then since then they've been able to raise debt financing, which they're actually currently only at 15% debt to equity. They have about $300 million in dry powder to put in invested capital. So there's really growth opportunities for this business, and that's why it fits all three goals of providing current income, growth of that dividend over time, and there's capital appreciation potential as they see this growth occur.
Cliff, what about non-performing loans? What's the history at Solar Capital?
Solar Capital has actually got a great legacy portfolio. It's a very high-quality portfolio that, in fact, in the first quarter 2010, when they reported it, they had 0 non-performing loans, which is very interesting for this space. There's very few companies that can claim that. And that's partly because of the businesses they're in. For instance, 20% of their portfolio is invested in beverage, food, and tobacco industry, and that's a pretty resilient industry to be in.
Thank you very much. We're going to have to leave it there. Cliff Remily coming to us